what is angel investing? The first key thing is that angel investors put in their own cash. I think that's an important bit. So they don't invest another person's money, they invest their own cash. The second thing is, they don't just invest cash, they invest both cash plus time. These are some key items which I think, and in some sort of order, that I think you should be looking at if you want to make investments in early stage ventures. Market, the people, in fact I would say the people.
There has to be a clear commercial opportunity, right, that can get captured. And in countries like Kenya, there are lots of untapped business opportunities that can get captured. The key thing is, can the entrepreneur execute? Does he have a team? Classic business things. Can I add value to it, either as an individual or as a solo, to realize return over time? And if it's not a hockey stick growth business, then don't do it as an equity deal. Structure it as a revenue share. Have some income starting to come out of that investment. So there are many ways to play it, right? And that's what I love about angel investing personally, is that you can skin the cat many ways.
And of course, asking yourself, is it a good investment? Yeah, it's not just is it a good business, is it a good investment from the perspective of exit, the valuation you're entering at, because these other factors are all about, is it a good business? Yeah, but you need to ask, is it a good investment? Additionally to that.
So we found a company back in 2010, been running for 2 years, Bridge International Academy, the low-cost school chain that runs now in Kenya, Uganda, India, Liberia. When we met them, they put in about 100,000 of their own money. They have big ambitions, but everyone just looks at them and went, you want to do low-cost education for the poor in slums, no one's going to invest in that. And so one of our angels in our network put in 50,000, then he put in a following 100,000, which gave them a little bit of money, a little bit of pipeline to kind of get going. But the biggest help that he did was he introduced them to other people. And one of the bigger funds in our network said, look, we'll watch and see what happens. That fund is Novastar Ventures, a venture capital fund with 80 million under management. And after about a year and a half, they said, okay, we're ready to put in money. And they put in a few million initially, and they did a follow-up round of financing, and they've kind of gone on that journey with Bridge International Academies to the story that we know today, a company that's been able to scale in multiple markets.
Well, you should not invest if you don't know the other investors.
It's about do your due diligence. It starts with, first of all, starts with the premise that I'm better off sharing and pooling risk, but you've got to understand who you're sharing the risk with. So you've got to understand whether your partners are coming to the deal, do you trust them? You're going to syndicate a deal, you're going to co-invest, you're going to have to agree around how you're going to govern the company, and so on. So one of the key elements in group angel investing is the element of trust. And I think one of the things about particularly angel investing, you've got to enjoy what you're investing in. Take a portfolio approach, but you've got to enjoy it. It's got to be fun, right? You've got to really like the company beyond ROI.
I think we also have a cultural mindset issue, especially in East Africa, around the fact that Chama's control, I think it's like 300 billion shillings worth in terms of the economy. But you look at what Chama's investing, we all know it is land, real estate. Let's build a block of flats and get rent. And I think as long as that mindset remains, that this is the way to make money, I think people will just not invest directly in startups.
Knowing what your business's potential is, knowing who the right investors are for you, I think that's very important. I'm saying this as an investor. I'm saying it as an investor. When you're young, a young business, it is a really bad idea to go after capital.
I believe that if you get local-based, high-net-worth investors who are very connected to make investments, then you start not only providing financing, but also providing this additional element of coaching, mentoring, connections, and helping in terms of success of the venture.
I hope that through this masterclass we'll actually get a few more angel investors who are interested in investing in local companies. And as Steve has rightly said, a lot of the funding that is in this market is actually going to foreign founders. And the main reason is because they say they have their networks. Success in fundraising is actually a function of how well networked